For pre-patent transfer of property, boot refers to exchanges. What is exchanges? The term boot is not used in the Internal Revenue Code or the regulations, but is commonly used in discussing the tax consequences of a Section 1031 tax-deferred exchange. For example, if a property worth $150,000 is exchanged for a property worth $145,000 plus $5,000 cash, the cash is considered the boot. Receipt of boot doesn't disqualify an exchange, but it may result in a taxable gain. Which of the following statements is most correct? The real effect of a sale to the state by the tax collector is to start the redemption period running, but the delinquent owner remains in possession for 5 years. What is the real effect of a sale to the state by the tax collector is to start the redemption period running, but the delinquent owner remains in possession for 5 years. If the property taxes are delinquent, the property is sold to the state by operation of law. Once sold, the owner remains in undisturbed possession for a period of 5 years. During those 5 years, the owner is capable of redeeming the property by paying all back taxes plus any interest and/or penalties that are owed. This 5-year redemption period starts running on June 30th. A deed of reconveyance must be executed by the trustee. What is the trustee? If the loan is paid in full, the beneficiary will issue a request of reconveyance and the trustee will issue a reconveyance deed. On an escrow closing statement, an existing mortgage that is to be assumed by the buyer is treated as a credit to the buyer. What is a credit to the buyer? The buyer has to have good credit to get a mortgage. A loan being assumed by the buyer is listed as a credit to the buyer and a debit to the seller. The closing statement looks at the loan in relation to the purchase price of the property. The assumed loan is a credit for the buyer toward the purchase of the property, even if the assumed loan is a debit to the buyer's personal accounts. The purpose of the assessment roll, as compiled by the assessor's office, is the establishment of the tax roll. What is the establishment of the tax roll? An assessment roll is a record of taxable persons and property in a taxing jurisdiction. The assessment roll serves as the tax base. When the owner of a property believes that her property has been overassessed by the county assessor, she should contact the Assessment Appeals Board. What is the Assessment Appeals Board? If a buyer or any other property owner felt that his property has been overassessed, he can make an appeal to the Assessment Appeals Board. To be recorded, a deed must be filed with a preliminary change of ownership report. What is a preliminary change of ownership report? To be recorded, a grant deed must be filed with a preliminary change of ownership report in the county recorder's office for the county where the property is located. This form updates tax and transfer information regarding the property conveyance. Legally speaking, an attachment is : What is a lien? An attachment is considered a lien. Lien is a monetary encumbrance, meaning you owe money. Whenever you see the word lien, think of money. The other options do not involve money. Note: one of the legal tests of a fixture is method of attachment. This question is asking what is considered to be an attachment, and legally speaking a lien would be an attachment. Jerry is selling his 16-unit apartment building. The buyer asks Jerry for tenant confirmation of the terms of the rental agreement, like the amount of rent, the amount of security deposit and the expiration of the agreement for each occupied unit. The tenants would most likely be providing : What is an estoppel statement? An estoppel statement is used to inform a potential buyer of commercial or residential rental property of the rights and privileges of existing tenants. The estoppel certificate requests information about rental amount, lease terms, protected tenancy status, oral agreements with the landlord, amendments to written lease agreements, promises made by the landlord, and agreements with respect to the payment of utilities, for example water and gas. In short, the estoppel agreement is meant to completely describe the nature of the relationship between the landlord and tenant. The goal is to put any prospective buyers of the rental property on notice regarding the rights and privileges that the existing tenants enjoy. Which of the following may appear on a closing statement as a credit to the buyer? What is the balance of an assumed loan? A loan assumption is a transaction in which a person, the assumptor, obtains an ownership interest in real property from another person and accepts responsibility for the terms, payments and obligations of that other person's mortgage loan. It is money the buyer doesn't need to bring to the table at closing, so it's a credit to the buyer on the closing statement, even though it's a debit to the buyer's personal accounts. Escrow instructions can be executed by sellers, buyers. All of the other options are correct. Third parties. What is all of the other options are correct? Escrow instructions are executed by buyer, seller and third parties. The cost of title insurance is based primarily on What is value of property? Title insurance is a form of indemnity insurance predominantly found in the United States, which insures against financial loss from defects in title to real property and from the invalidity or unenforceability of mortgage loans. The vast majority of title insurance policies are written on land within the United States. When a judgment is fully recorded, subsequent buyers and innocent purchasers who are ignorant of the recording have received : What is constructive notice? Constructive notice attaches once a document is recorded. Once recorded, subsequent buyers will be deemed to have received constructive notice regarding the document and its effect on the property in question. This could also be taken by possession. Actual notice is when an individual has first-hand knowledge of something. For example, if a buyer has knowledge that someone has taken possession of the property that is for sale. Prepaid insurance and tax reserves, in which the buyer assumes the mortgage, will appear on a typical closing statement as A:_. What is debit? The buyer and a credit to the seller. In accounting, an entry that appears on the left side of the page is a debit and entries on the right are credit. In real estate, a debit is money you owe, and a credit is money coming to you. The debit section highlights items that are part of the total dollar amount owed at closing. On a closing statement, a debit for one side is usually balanced by a credit on the other side. For example, if a seller is credited for prepaid taxes they have already paid, there will be a debit for the buyer in the same amount. In which of the following situations would property be reassessed at fair market value? What is when there is a change in ownership? Property is always reassessed upon sale or property transfer. This reassessment usually results in a supplemental tax bill. The payment of any increase in property tax due to the reassessment and any resulting supplemental tax bill would then become the responsibility of the buyer. When a real estate broker speaks of tax shelter, he or she is referring to what is income tax? Tax shelter is a general term used to include any property or other investment which gives the owner certain income tax advantages, such as deductions for property taxes, mortgage interest or depreciation. Which of the following costs would be classified as a recurring cost? What is impound account items? An impound account, also called an escrow account, depending on where you live, is simply an account maintained by the mortgage company to collect insurance and tax payments that are necessary for you to keep your home, but are not technically part of the mortgage. The owner of a hardware store who owns real property where it was located, sold the real property and leased it back for a long term. For income tax purposes, the seller may, what is deduct 100% future rent. In a sale-leaseback the seller becomes a tenant, thus allowing the seller to deduct all of his future rent payments as business expenditures. In a sale-leaseback arrangement, the buyer should not be concerned with the seller's book value. An escrow agent discovers there is no specified date of closing. In this case, escrow should close what is within a reasonable time. If a specific closing date is not specified, the parties may agree in writing to a closing date. Otherwise, the escrow would continue and close within a reasonable period of time. Real property taxes become a lien on what is January 1st. Next year's real property taxes become a lien on January 1st. The purpose of the assessment roll, as compiled by the assessor's office, is what is the establishment of the tax roll? An assessment roll is a record of taxable persons and property in a taxing jurisdiction. The assessment roll serves as the tax base. A deed of conveyance contained only the following guarantee: this property was not encumbered during the time the grantor owned it except as noted in this deed. What type of deed did the grantor give to the grantee? What is special warranty? A special warranty deed is a deed in which the grantor warrants only against defects occurring during their ownership. The grantor of a special warranty deed does not provide a warranty or guarantee against any defects in clear title that existed before their ownership. An apartment house was purchased for $180,000. At the time of purchase, it had a fair market value of $200,000. And an assessed value of $140,000. The basis of the property for federal income tax purposes would be, what is $180,000? Basis is the value placed upon property for purposes of capital gains and depreciation. The basis upon purchase of real property for investment purposes is generally the cost referred to as the original cost basis. A special warranty deed differs from a general warranty deed in that the grantor's covenant in the special warranty deed, what is applies only to a definite limited time. The more common deed in most states is the general warranty, because it establishes the ownership trail and validity of title going back to the original recorded ownership. For example, the purchase of Manhattan Island and all subsequent divisions, subdivisions and resales. Under a special warranty deed, an owner transfers property guaranteeing the quality of title only during the period of his or her ownership, leaving subsequent buyers vulnerable to prior claims. Which of the following provides a buyer with the best assurance of clear, marketable title? What is title insurance? Title insurance provides the best assurance of marketable title. The IRS, Internal Revenue Service, would define marginal tax rate as, what is the tax rate which is used for the next dollar of taxable income. Marginal tax rate is the tax rate that is applied to the next dollar of taxable earned income. What is the main responsibility of a county tax assessor? What is estimate the value of properties for tax purposes? In many states, the tax assessor must make a number of sometimes subjective judgments about properties to establish value for tax purposes, including curb appeal. In California, it's more cut and dried, with a maximum increase of 2% a year, except for structural modifications which will trigger a reassessment. To determine property taxes on the residence, What is assess land and improvements separately, then multiply the total by one tax rate. Land and improvements are added separately and then multiplied by one tax rate. For homestead to be effective, when must a homeowner assert those rights? What is before any court judgments are recorded? In bankruptcy proceedings, a judgment is first rendered before it is recorded and made final. Homestead rights may be asserted up to that last moment. A defect or a cloud on title to property may be cured by what is obtaining proof of satisfaction from all appropriate parties. In United States property law, cloud on title or title defect refers to any irregularity in the chain of title of property that would give a reasonable person pause before accepting a conveyance of title. When a judgment is fully recorded, subsequent buyers and innocent purchasers who are ignorant of the recording have received. What is constructive notice? Constructive notice attaches once a document is recorded. Once recorded, subsequent buyers will be deemed to have received constructive notice regarding the document and its effect on the property in question. This could also be taken by possession. Actual notice is when an individual has first-hand knowledge of something. For example, if a buyer has knowledge that someone has taken possession of the property that is for sale. Carl purchased a 13-unit apartment building. If he reports his income on a cash basis, he can deduct all of the following on his next income tax return, except, the cost of redecorating 2 vacant units, interest payments on the second trust deed, depreciation, when the value of the property has increased, a loss of rental income due to vacancies suffered by 5 units. What is a loss of rental income due to vacancies suffered by 5 units? Vacancy losses are not deductible on an income property, but federal tax laws allow a property owner to deduct depreciation, mortgage interest, and maintenance costs. Upkeep. There are several differences between an extended coverage policy of title insurance and a standard coverage policy of title insurance. Which of the following is insured under the extended policy, but not under the standard policy? What is the possibility that some improvements on the insured property are located on adjoining land? Extended policy covers improvements on adjoining land. Real property becomes tax defaulted immediately after real property taxes become delinquent. The owner-occupant. What is remains in undisturbed possession? Property on which taxes remain unpaid at 12:01 a.m. on July 1st becomes what's known as tax defaulted land, but the owner remains in possession. If the property is tax defaulted for at least 5 years, however, the county tax collector has the power to sell that property to satisfy the delinquent taxes. The unadjusted basis of a taxpayer's residence would be, what is cost? For federal income tax purposes in determining gain or loss on real property, the term unadjusted basis most nearly means original cost. Unadjusted basis refers to the original cost to purchase an asset. Adjusted basis is a related term, and refers to any adjustments made to the original purchase price of an asset over time. Unadjusted basis is used mostly in accounting nomenclature and is akin to the concept of cost basis. An acknowledgement may be taken by a notary public who is, what is a corporate employee without interest in the corporation's instrument being acknowledged? An acknowledgement may be taken by a notary public who is an employee of the grantor's corporation, but only if the notary public has no interest in the transaction. Acknowledgements are done by a notary, who is a public figure authorized to attest to the signing of documents such as deeds or mortgages. The notary public certifies that he or she has witnessed the signing of the document by also signing the document and affixing his or her official seal. Simply said, they are who they says they are. Involuntary methods of conveying property include all of the following except, adverse possession, condemnation, quitclaim, escheat, what is quitclaim? A quitclaim action is always voluntary and is usually used to clear up minor title issues. The selling price on a buyer's closing statement is treated as, what is a debit to the buyer? A closing statement is a detailed cash accounting of a real estate transaction prepared by a broker, escrow officer, attorney or other persons designated to process the mechanics of the sales, showing all cash received, all charges and credits made and all cash paid out in the transaction. Selling price on the buyer's closing statement is treated as a debit to the buyer. Which of the following title insurance policies provides protection against all possible defects in the condition of a title? What is no policy protects against all possible defects? No policy protects against all possible defects in a title. Sam owned a triplex valued at $150,000 with an adjusted basis of $70,000. King owned a duplex valued at $145,000. Both properties were owned free and clear. They exchanged their properties, with King giving Sam $5,000 in cash. For federal income tax purposes, what is Sam has a recognized gain? Sam and King exchanged the properties. Ultimately the basis and value of both properties were made to be equal due to the exchange. King gave Sam an additional $5,000 which resulted in Sam recognizing a gain from the exchange. A valid deed must contain, what is a granting clause? Deeds provide evidence of the transfer of title of real property from a grantor to a grantee. For a deed to be valid, the grantor must be legally competent, the deed must be delivered and accepted, and it must contain a granting or action clause. A deed does not need to be acknowledged to be valid. Which of the following rights of ownership in real property do individuals normally not have? What is eminent domain rights? Eminent domain is when the property is taken by the government because it is necessary for necessary public use. The owner of the private property taken receives just compensation through a process called condemnation. Eminent domain is usually not held by individuals. When a title company issues a California standard policy of title insurance, the policyholder is insured against loss which occurs because of. What is forgery in the chain of recorded title? Standard policy of title insurance protects against forgery and improper delivery. However, it does not include a survey or on-site inspection. Which of the following deeds would least likely contain implied covenants by the grantor? What is quitclaim deed? The implied covenant is a tool of contract interpretation meant to ensure that the parties' reasonable expectations are fulfilled. The implied covenant prevents a party to a contract from violating the spirit of the contract, even if the contract does not expressly prohibit the parties' actions. A quitclaim deed is a deed operating as a release intended to pass any title, interest, or claim which the grantor may have in the property, but not containing any warranty of a valid interest or title in the grantor. What is the main duty of the county assessor? What is determine the amount of tax to be paid by property owners? The assessor is a local government official who estimates the value of real property within a city, town, or village's boundaries. This value is converted into an assessment, which is one component in the computation of real property tax bills. Which of the following could not be real property? What is an existing mortgage? An existing mortgage is not real property. It is a loan agreement between a lender and a borrower and, as such, is personal property. In California, one would look in which of the following documents to find the escrow law. What is the California Financial Code? Escrow involves the deposit of funds and/or instruments by buyer and/or seller with a neutral third party who has agreed to execute the provisions of an agreement or contract. Rules of escrow can be found in the Financial Code. A deed of conveyance contained only the following guarantee: this property was not encumbered during the time the grantor owned it except as noted in this deed. What type of deed did the grantor give to the grantee? What is special warranty? A special warranty deed is a deed in which the grantor warrants only against defects occurring during their ownership. The grantor of a special warranty deed does not provide a warranty or guarantee against any defects in clear title that existed before their ownership. An ALTA policy of title insurance goes beyond the protection afforded by a CLTA policy in guarding against. What is the location of property lines according to formal survey? American Land Title Association Title Insurance Policy. It is the most comprehensive form as it includes a survey. Which of the following is usually required to report the sale of a single-family residence to the Internal Revenue Service? What is escrow? Escrow involves the deposit of funds and/or instruments by buyer and/or seller with a neutral third party who has agreed to execute the provisions of an agreement or contract. Rules of escrow can be found in the Financial Code. At the end of the transaction, escrow writes the checks, therefore they will report to the IRS. A deed of reconveyance must be executed by the. What is trustee? If the loan is paid in full, the beneficiary will issue a request of reconveyance and the trustee will issue a reconveyance deed. In the sale of a residence, when the buyer is to take possession of the property prior to the transfer of title, the buyer and seller should execute a. What is interim occupancy agreement? Interim occupancy agreement is an agreement allowing a buyer to take possession of a property as a tenant prior to close of escrow. Alyssa died intestate, leaving a large estate and no heirs. What is the most likely disposition of her property? What is it will escheat to the state if no claims are made by possible heirs? Escheat means to revert, which is what will happen if no heirs come forward and establish a valid claim within the 5-year period. There are several differences between an extended coverage policy of title insurance and a standard coverage policy of title insurance. Which of the following is insured under the extended policy, but not under the standard policy? What is the possibility that some improvements on the insured property are located on adjoining land? Extended policy covers improvements on adjoining land. A title company could make a title search by searching the records of the. What is county recorder's, Federal Land and County Clerk's Office? A title search is a review of all recorded documents affecting a specific piece of property to determine the present condition of title. The unadjusted basis of a taxpayer's residence would be. What is cost? For federal income tax purposes in determining gain or loss on real property, the term unadjusted basis most nearly means original cost. Unadjusted basis refers to the original cost to purchase an asset. Adjusted basis is a related term, and refers to any adjustments made to the original purchase price of an asset over time. Unadjusted basis is used mostly in accounting nomenclature and is akin to the concept of cost basis. On the seller's closing escrow statement, which of the following is usually a credit to the seller? What is the proration of prepaid taxes? A credit is money that is owed to you. An example of a credit for the seller would be prepaid taxes. The item that would appear on the debit side of a buyer's closing statement would be. What is purchase price? Debit is money you owe when escrow is closed. So an example of debit for the buyer would be the purchase price. Do not confuse debit with debt. A debit is associated with the purchase of assets or expense transaction. A debt is an amount of money owed to a particular firm, bank or individual.